Hello there. Welcome to IA Global Asset Management's quarterly podcast, where our portfolio managers and asset class experts discuss current market events, trends, portfolio allocation, and outlook. I'm Rose Marcello. I'm a client portfolio manager at IAGAM, and my guest today is Maxime Wood, portfolio manager, thematic investments. Max has been a key player in the US thematic strategy since 2017. Today, he leads the strategy with the support of two analysts. Good morning, Max.
Hey, good morning, Rose, and Happy New Year.
Happy New Year to you too, and Happy New Year to our listeners. Today, with you, I'd like to discuss the normalization in leadership within the US stock market after the big rebound in Q4, your 2024 outlook for equity valuation, but also your top ideas for the year ahead. Maybe let's start with the price movement of the last quarter. It started with a couple of negative macro headlines, then the Fed announcing they were about done with this rate hike cycle. What's your assessment of that rally? What has changed?
So quite a pretty interesting and big rally in the last quarter of the year. Just to put things in perspective, I'll throw some number out there. So the the S&P 500, sorry, returned 11.6% just in Q4. The Nasdaq returned 14.6. And one that is really interesting is that when you look at the S&P Small Cap Index, it returned 15%. And what's interesting from the small cap perspective is that from the full year, it returned 16%. So the first 3 quarters of the year, the index was only up 1%. So what's interesting is that in terms of leadership, it was clear that it was a broadening of leadership. We saw a cyclical sector like financial, industrial do really well, as well as rate sensitive one like REITs. And also, what was interesting is that when you look at technology, which also did well, it was broad based across most of the company in this sector. So now, what is striking with this rally is it was really driven by anticipation on rate cut, and it was mostly multiple expansion. When we look at the price earning from the SPX, it took two-turn premium in just 3 months, and it went from 17 to 19 times by the end of the year. But fundamental for most company didn't change. So I do think that when we look from here, I think the easy lifting is done because I don't expect multiple expansion to continue to go up from here. We're starting to be extended. So really, what's going to drive earning momentum and just performance next year, I do think it's going to come from fundamental and earning growth.
Good. So maybe the question now is like, now what? What are your expectations for US equities in 2024? What are the main risks that you see? How are you positioning the portfolio?
So, like I said, I think the easy lifting is done from multiple expansions. So we really need to see some fundamental improvement. To that point, there's some specific sector that I've started to see some. If we take a 10,000 feet view, we just look at IT spending is slightly but surely increasing and is expected to increase this year. Advertising has been good and it's growing. And we have a lot of tailwind from fiscal stimulus in the industrial sector. So we're in the camp that a soft landing is possible, but we acknowledge that there is still some risk on the labor market that need to be on watch, and also with the consumer health. But in terms of how we think the year will play out, we're a bit cautious going into the Q4 earning and 2024 outlook. And the main reason is that anticipation with the end of the year rally is quite high. And we do expect that some sector that have rallied a lot won't be able to deliver on in terms of expectation for next year. There's still some lack of visibility, and we do expect some conservatism that could bring some pullback in certain sectors. So right now, to begin the year, we do expect to have a bit of a continuation of 2023, where this secular growth sector and company that benefit from AI, for example, obesity drug, reshoring, cybersecurity, everything that did well and that was able to grow last year. We do expect to see a bit of discontinuation in the first half of the year, but we do think that we could start to see some market leadership change as we go through the year, because we do believe that fundamental will improve, and when we get some rate cut into the system, then we could start to see leadership change again from to cyclical and small cap like we've seen at the back end of the year.
Very interesting. And maybe one last question from me is that if you were to share some of your top ideas for 2024, what would that be and maybe why?
Yeah, so maybe to start, just a bit of perspective on our position to start the year. So we're really barbell right now. We still like company that are behind AI, cybersecurity, like I said, reshoring, GLP-1, all the big theme that played out last year. But on the same time, we're starting to be overweight in some defensive sector where valuation is not demanding, like utility and pharma. But when I look at topic for 2024, I would point three. The first one, quite an easy one, is Amazon. There's really two reasons why we like Amazon. The first one is Amazon is expected to be capitalizing this year on all the overinvestment that they did on their retail side of the business during COVID. And what it's going to do is that it will improve throughout the year their profitability perspective for this part of the business, which is going to lead to earning revision. The other part that we really like is on the cloud business, so AWS. So since the end of 2022, we've been in an optimization period for the cloud, and we're ending that period. So we do expect that the end of the optimization plus some contribution from AI workload will drive AWS growth to accelerate this year. So when we put those two together, we see great opportunity for earning revision, and that's why we like Amazon. A bit in the same topic, the second pick that we really like is Snowflake. For those that don't know Snowflake, it's a data warehouse platform. The reason we like Snowflake is that when we look at last year, the big performer in terms of the AI team were really what we call the enablers. So company that help to build the infrastructure to create those large language models. So when we think about it, it's the cloud provider and the chip like NVIDIA, AMD, Broadcom, to name a few. Now, when we look at how we think things will play out for AI, is that we expect that most company will want to tailor some personal model to their respective data and industry and field of work. And to be able to do that, the first thing that they need to do is they need to put their data in order. And the best way to do that is obviously they need to put their data in the cloud and use a data warehouse provider like a Snowflake, for example. And that's why we do believe that the next leg of acceleration of growth and company that will benefit from this explosion of AI will be those data warehouse and data platform provider in the cloud. So that's the reason why we like Snowflake heading into 2024. The last one I would point is a company named Adcore. It's not a well-known company, but it's at the core of the energy transition. So Adcore is a company in the industrial sector that is involved in the manufacturing of conduit. What's really interesting is that most of the end market that Adcore is exposed is positively impacted by fiscal stimulus at the moment. We can think about the IIJA, the Inflation Reduction Act, and the CHIPS Act. One of the other characteristics that we really like is that it's a very low competitive market, because when you look at conduit, one of the key specificity is that you cannot ship those conduit in an area that is more than 500 miles with it being economically profitable. So Adcore is the company that has the biggest national footprint in the US. They are the prime partner for our large electrical distribution company, which make them the leader and at the center of the energy transition. And the last thing that we really like is that valuation is really appealing because it's a not well-known company with a pretty small size at 6 billion of market cap. So that would be the three pick that I would like to point out this year.
Thank you for that. Thank you for the generosity of sharing your ideas like that. Maybe any final thoughts you'd like to share with us?
Yeah, just overall, when I look at 2024, like I said, pretty positive on the year. I think it's still important to highlight that there is some risk. We need to see inflation come down. There's a lot of expectation from rate cuts. There's a lot of things happening in the Middle East right now. There could be some supply chain disruption from the Red Sea that could bring temporary inflation back into the system. So we do believe those things are to keep in watch. The other thing is it's going to be an election year, so all of that put together, there could be a lot of volatility this year. But when we look at fundamental, we do think it's going to be improving. So even if there's volatility, we do think it's going to be a good year for the stock market, and it's especially for stock picker like us. So we're pretty positive going forward.
Well, good to know volatility, but return should be there for us at the end of the year. That's very positive. Well, thank you so much, Max, for taking the time.
Thank you, Rose.